Hey guys, we talked to you about Geneva before. They're always looking for loan officers who are taking their business seriously. They run a pretty good outfit over there. They've got great interest rates. And Aaron is a fantastic guy. All you have to do is click this banner right over there. Before we get started, I was noticing yesterday that it was 120 degrees in Phoenix, Arizona. Now, in California, we'll have these rolling blackouts. My question is, in Phoenix, if they get one of these rolling blackouts when it's 120 degrees, does that mean half the city of Phoenix is going to pass away? It's the craziest thing I've ever seen. Anyways, if you're in Phoenix, let us know how you deal with this. Send us a comment down below. Now, on to the show. So we spoke about this on yesterday's show, how the House and the Senate both have bills before Congress that are at odds with each other. One thing we didn't talk about is how they're dealing with payday loans.
With your broke ass.
So the House Appropriations Committee, they voted 30-18 to block the CFPB's rule to regulate payday lending as part of the bill. The CFPB says they want to end debt traps, vicious cycles where payday loans are rolled over and over again on an average of 8 times. And they have interest rates that are through the roof. You know, Frank, the other guy in this video, he shared a story with me about a gal who had a payday loan quoted at a rate of 135%. Yeah, it's pretty bad stuff, guys. So get rid of them, right?
Opponent Representative Steve Palazzo says, I don't want my constituents being forced to loan sharks or forced out onto the streets because another government agency wants to regulate businesses out of business. Drying up all the access to credit will cause small businesses to close, people to lose their jobs, and many to turn to less regulated, often illegal means of securing credit.
Okay, well, this all works if those taking out payday loans pay the loans back right away. The problem is, people don't. The CFPB says they have serious concerns that risky lender practices in the payday auto title and payday installment markets are pushing borrowers into debt traps. And both of these points, pro and con, are right.
Because if you limit payday loans, people will find riskier means to borrow money. True.
And if you don't limit payday loans, people will fall into debt spirals. Also true. But you know what people aren't talking about in this conversation?
The people that use these high-rate, high-risk, short-term loans. They're broke, man. Their situation is already screwed up before they even get a payday loan. That's why they're getting a payday loan. They're broke, and their situation typically sucks.
No judgment, it's just the truth. So you can limit payday loans or you can leave them alone. Either way, the situation of the borrower is totally screwed up. Now, we bring this up because this is what Congress is fighting about. Let the CFPB regulate payday loans or leave them alone. Either way, it doesn't matter because neither option changes the reality of the borrower.
Congress arguing about payday loans like a doctor diagnosing and treating a cough and ignoring the lung cancer responsible for the cough. Yet, here we are.
That's right, Frank, here we are. So now the House and the Senate have dueling 2017 spending bills that are at odds with each other. One such reason is what to do with the CFPB and payday lenders. The House wants to leave them alone, and the Senate, they want to regulate them. Again, either way, the problem persists as the profile of the consumer in the situation is more often than not just broke.
Speaking of payday lenders, at least our guidelines, rules, and regulations are not like those found in China. Now, that's an odd sentence, isn't it? Check this out.
There's people watching this right now saying, hey, I didn't see that one coming. Okay. So short-term lenders in China have found an interesting way to collateralize loans for cash-strapped people. Private lenders are asking young women to send nude photos of themselves as a form of collateral, along with copies of their ID cards. They warn that the photos will be made public if payments are not made on time.
You know, when we think of our lending guidelines in a global sense, it's really not so bad.
One Chinese borrower told a newspaper that she borrowed $76 from an online provider with a weekly interest rate of 30%. She kept taking out new loans to pay off the old ones, and now the debt sits at $8,347. The lender demanded nude photos to guarantee the new loan, and that many of her classmates have been swept up into the same scheme.
How crazy is that? Well, think about it. The average payday borrower in this country rolls it 8 times. And I personally heard of an offer at 135% interest. I mean, what do you think that looks like after a few months? Payday lenders, here, China, anywhere, they're all stripping people one way or another, and it doesn't matter how you change the rules of the game. For Congress and the CFPB, what they need to come to grips with is you can't regulate away broke.
It's the symptom, it's not the problem that's being discussed here with these payday lenders as far as I can tell.
Right.
But I'll tell you what, if you're on either side of the fence with payday lenders, it's stupid we're even having this argument, and you really want to win your argument, here's what you need to do, Congress. Hire the NRA. Hire the NRA.
There you
because
go.
they don't lose any battles in Congress no matter what the situation. Hire the NRA and you will win.
All right, then. What are your thoughts on all this stuff today? Leave us your comments down below. Forward, share, and subscribe for in the upper right-hand corner. Don't forget to check out Geneva if you're looking to make a move. They are awesome. There's plenty of testimonials to that nature. You guys have a good one. We'll see you later. Bye-bye.
Bye. Have fun in Phoenix. I hear it's only 118 today.